All right, the market has pulled back about 5 to 6%, and we are now testing a key support level. This is a standard pullback for now, but the next major move, well, that's going to be dictated by two binary risk events over the next 1 to 2 weeks.
So the big question on everyone's mind is this a dip to buy or is it a warning? Let's dive into the data and frame the current action so we can identify the critical inflection points ahead.
First, let's just ground ourselves in the numbers. We've seen a 5 to 6% pullback across the major indices. This isn't a crash, it's a technical test, and it's brought prices right down to a level that really demands our attention.
To be specific, we're looking at the NASDAQ 100 through the QQQ ETF, which is now testing the $600 level. Now, this is a huge psychological and technical support zone. How price reacts right here, that's the first major piece of this puzzle.
But the situation is complex. It's messy. The market is basically caught in a tug-of-war between some very powerful bullish and bearish forces. And this conflict, this is the source of all the indecision we're seeing right now. So let's break this down. It's really interesting because the conflict is so direct. On one hand, you've got supportive central banks. There's a 70% probability of a Fed cut priced in, and you've got China firing up the printing presses with more QE. But on the other hand, the market's internal health, it's deteriorating. We see that in the weakening breadth. Fewer stocks are actually participating, and we've got a whole cluster of rare bearish signals flashing. And this chart, this perfectly illustrates the structural risk we're dealing with. Think about it. Over 40% of the S&P 500's weight is in just a handful of big tech names. This makes the entire index hypersensitive to how they perform. If a negative catalyst comes along, this concentration could really amplify the downside. So, all this tension needs a catalyst to resolve it, one way or another. And it just so happens we have two binary events coming up in the next couple of weeks that could do exactly that. The first is the risk of a U.S. government shutdown. And look, this isn't just political noise. A shutdown of, say, 10 to 14 days would delay critical economic data, almost certainly spike volatility, and it would directly hammer the travel sector because of FAA staffing cuts at 40 key airports. The second risk is a pending Supreme Court ruling on presidential tariff authority. This is a massive binary risk. A decision that limits that authority could force the repayment of hundreds of billions in tariffs. It would completely upend U.S. trade policy and create chaos for entire sectors that have built their models around the current rules. Okay, before we get into the scenarios, the mandatory disclaimer. This content is for educational purposes only. It aggregates public sources to help you stay informed and improve your own decision-making. Do your own research. This is not financial advice. And please, if this helps, a like and subscribe signals the algorithm and helps the channel reach more viewers. Your support is greatly appreciated. I put hours into improving the sources and delivery of this content. So how do we position for these potential outcomes? The way I see it, we can frame the possibilities using 3 distinct scenarios, and each one is tied to a specific price level. This table lays it all out. Our base case is that the market digests the news and holds QQQ at 600. Simple. The bull case? That requires a decisive reclaim of the weekly 20 moving average, likely driven by a positive outcome from these events. And the bear case is even simpler. A decisive break and close below QQQ 600. That's your signal that a real bearish catalyst has taken hold. Okay, let's just dig into the logic behind the bull and bear arguments a little bit more. Each thesis really just hinges on which of those macro forces wins out, the supportive policy or the internal weakness. So the bull thesis argues that the primary trend is still up. The bet is that strong tech earnings and that powerful seasonality will provide a floor under prices, which allows the market to just look past all this temporary political noise. The key risk here is simple. One of these binary events turns out to be a true market mover, not just noise. Now, the bear thesis, it argues that the market's poor internal health is basically a tinderbox. A prolonged shutdown or a disruptive court ruling, that could be the spark that ignites a much larger correction. A failure of QQQ at $600 would be the trigger, and that could lead to forced liquidations. The main risk to this thesis is a swift, positive resolution that just removes the catalyst and traps the bears.
All right, let's translate this framework into a couple of potential risk-defined strategies. We can use options here to really manage the binary event risk. So, the first setup is a bearish thesis on the travel sector. A government shutdown directly targets air travel through those FAA disruptions we talked about.
A put-debit spread on the JETS ETF is a very clean, defined risk way to isolate this specific catalyst, and your thesis is invalidated the very moment a shutdown resolution is announced.
The second setup aligns with our base or bull case. If the market does hold this key support and rebounds, a call debit spread on QQQ offers a defined risk structure to position for a rally right off that $600 level. The invalidation is crystal clear, a sustained close below that support.
And a critical reminder, trading options involves substantial risk. Capital is at risk, and you should always use disciplined position sizing and have a clear entry and exit plan before you ever place a trade.
So, here's the key takeaway. The market is coiled like a spring at a critical technical level, and it's just waiting for a catalyst. The government shutdown and the SCOTUS ruling are the two events most likely to dictate the next major directional move.
That is the framework for the coming 1 to 2 weeks. Use it to stay informed, trade your own plan, and always, always manage your downside.